The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello, welcome to Talkbox Europe. I'm Ben Boulos with Ian King and Arjun Karpal in New Delhi. These are your headlines.
The CEO of Europe's artificial intelligence darling Mistral tells me that large swathes of enterprise software could be heavily disrupted by AI.
We really think that, I would say, more than half of what's currently being bought by IT in terms of SaaS is going to shift toward AI.
Bayer agrees on a $7.25 billion deal to settle tens of thousands of open lawsuits over Roundup weedkiller. Shares surging more than 7% just before Tuesday's close in Europe.
Reform UK is set to unveil its plans for the budget watchdog and the Bank of England today, but independence is supposedly not in question. Meanwhile, investors digest fresh inflation data following Tuesday's jump in unemployment.
Hello, very good morning to you. It is Wednesday. Ian is with me, and so is Ritika. And Ritika has the very latest on the UK inflation print, which is just coming in. Ritika, what have we got?
Yeah, well, we've got the headline inflation figures coming in at 3%. So this is bang on expectations. Is expected to fall 40 basis points from 3.4%. So this actually coming in to be the lowest level since March 2025. So in a year, we're also getting the core CPI, of course, stripping out that volatile energy and food prices coming in at 3.1%. The expectation was 3% there. So all in all, if you look at that headline figure coming in line with expectations there, this is going to be welcome news for the Bank of England, because the Bank of England is hoping that inflation, or expecting inflation to get to target 2% by April. The question has been about whether it consistently stays there. Of course, some of those budget measures were seen previously as temporary. But overall, if you combine this with the unemployment data that we got yesterday, rising to 5.2%, and that wage pressure coming down, things seem to be moving in the right direction for the Bank of England. And the big question is what it means for interest rates, because it paves the way for a cut in March. So previously, traders had been thinking it would be more or less April, but after that data yesterday, we saw the expectations rise to 80% for a cut in March. Of course, we had a very dovish dovish hold at the last Bank of England decision. So the question is basically when, not if, when it comes to rate cuts. The question is being about the timing of the cut and the quantity of cuts. So we see this big shift of the Bank of England focusing from inflation now to the demand side, to the unemployment, and what we're seeing in the unemployment figures. And I spoke to George Buckley about inflation, which, as we mentioned, trending lower. The Bank of England expecting it to return to target 2% by April. But there are questions, again, about it staying sustainably at 2%. Now, George Buckley of Nomura, he's a chief UK economist there. He walked me through what the government policy could mean for inflation, that he also expects it to kind of remain at 2% now, or more or less around with target, along with the Bank of England. Take a listen.
There's definitely some budget implications from what they did last year and also the previous year, so that they are coming through. They will cause a bit of volatility in these figures. But the point is that the Bank of England and ourselves do not expect inflation to pop back up again once those effects have been seen through. So we think that inflation will stay around its target, and so does the bank. So I think that it's encouraging that we are seeing some evidence. But as Andrew Bailey said at the last MPC meeting, he needs to see further accumulation of evidence, not just one-off numbers, further accumulation that wage growth, that price growth is actually moderating, and we're getting down to levels which we can be more comfortable with and which are consistent with the Bank of England's target.
That was George Buckley. There's a chief UK economist there talking about the inflation, which we've seen trending lower, coming in now at 3%. That was bang in line with expectations. A big question about what it means for rate cuts. It seems to be bringing forward the expectation that we get a rate cut in March. We're seeing little movement off the pound off the back of this. And I'll also just run you through UK January services CPI, which is coming in at 4.4% year over year.
Thanks, Ritika. Yeah, sterling unchanged there, looking at that bang in line with expectations. More than half of what's being currently bought by IT in terms of software as a service is going to shift to AI. Mistral AI Chief Executive Arthur Mensch told Arjun Kapoor at the AI Impact Summit in New Delhi. Speaking to CNBC, Mensch also weighed in on agentic AI adoption and the impact of the software sector.
There is definitely a shift and a replatforming that is happening where the interface is no longer the thing, where there's no longer the moat. What really matters is the connection, what really matters is the context layer on top, where the agents are constantly pulling from system of records to figure out what is happening. So there is a replatforming happening. Now, I mean, enterprise software, I would say, are there to stay because they have very big distribution, and they're also moving toward making their system more agentic and more relying on AI. But the replatforming is a big opportunity for us because we see now have more than 100 enterprise customers that are coming to us also with that wheel of maybe changing and replatforming their IT system. So maybe getting rid of certain things that they bought like 20 years ago, and that is starting to be a bit expensive. It's starting to be hard to customize and to maintain. And they see AI as a way to replatform the thing so that it becomes more efficient and less costly.
Fascinating. So do you, how much of an enterprise's current SaaS workload do you think could be taken over by some of these systems?
Well, I'd say the systems of records are not going to change and to move because the data gravity remains very high. But it's hard to estimate, but I'd say everything that is too vertical is going to need to go a bit more horizontal because the verticalization can really occur very quickly. I do expect the large enterprise software that manage big systems of records to try and move up because they need to defend. They don't want to become the system of record commodity to companies like us. But we really think that I would say more than half of what's currently being bought by IT in terms of SaaS is going to shift toward AI.
Well, let's get back out to Arjun, who joins us from the India Accelerates event on the sidelines of the AI Impact Summit in New Delhi. He's joined by a special guest. Arjun, who have you got?
Good morning again. I've got with me Bernard Menser, who's the president of International for Bank of America. Bernard, we just were playing a package from the CEO of the Mistral AI, and he was saying that he believes that around 50% of current software that is being bought by enterprises could be replaced and shifted towards AI. This has been a big concern for markets more broadly. At the moment, we saw a software sell-off in tech stocks, and we're just seeing general volatility around technology. What's your current read on what's happening in the markets right now?
I think my read is that the markets are adjusting to the news flow that they're getting. Everybody's absorbing what's happening with AI. So I think there's this price discovery in a sense, because market participants are like, oh my gosh, what does this mean? And to my mind, the key issue is the time horizon. So I think that's what we're seeing with the market price action.
Is there a sense of the market being on edge to some extent because of the debates we've seen around AI's disruption on things like software, but also continued concerns over valuations, over spending from some of the big tech giants? We saw them all ramp up CapEx projections just a few days ago.
I think you've hit it. I think there's a confluence of two things. One is, what might AI mean? There's a little bit of CapEx, but I think in the other bucket, we've had 2 or 3 years of strong equity markets growth and valuations. And the question is, do these two come together? And it's difficult to argue whether you disaggregate them or not, but I think those two things are going on kind of in parallel.
Where do you think, sort of, when it comes to sort of the AI story, so much of the value has been accrued around the picks and shovels layer, right? We look at chips and the hyperscalers. How do you think investors are looking at where the next layer of value comes from at this point?
Well, I think it is exactly that. What's the return on investment people have talked about? And so you have all this infrastructure that's gone into play, and then how does it feed through in terms of the end user who's going to pay for it? What are the actual services? So I think there is reasonable for people to look at some of these sectors and say, will I need this service or not, or will something displace it? I think some of the time horizons are a little bit compressed. But I often think back to the early 2000s with the internet. A lot of that infrastructure was put in place, and we're benefiting from that today. The thing is, when you look back then, not all of those that made the investment won, as it were, or reap the benefits, and that's the debate that's going on.
As you look at sort of the current market conditions, do you feel that this AI trade is somewhat in a bubble?
That's such a tough question. Look, I think that I'm sure there are bits in there where the valuations are high, and some of those valuations, if they move by 5 or 10%, but then maybe they've gone up 100%, so if they're back 10 or 15%, doesn't matter so much. But in terms of the overall AI use case, the ubiquitousness of it, how horizontal and pervasive it's going to be, I think that's going to roll out. To my mind, the key question is it 6 months, is it 2 years? And it depends on the sector that you're in. Some sectors might be hit earlier, sooner, some might be a little bit later, some might be able to pivot until that time comes.
I guess the public markets are one thing, but there's also this incredible activity going on in the private markets with big companies like OpenAI and Anthropic, being able to raise huge amounts of capital from venture, but also from corporate investors as well. In the private side, are you seeing the growth justifying some of the valuations we're seeing?
Well, the private side is, that's something new. In my career, having companies that are worth 100, 200, 300 billion and still private is quite a thing. And so that's new. In terms of the valuations, we have been through an exercise with companies like Amazon and with companies like Tesla where they were way ahead of the valuations in terms of multiples, and there were a lot of people that went along the way and sort of said, well, that's going to draw back. But actually the market's caught up with what essentially sort of became category killers. So you can't sort of sit here and sort of say, well, these things won't achieve that, and you make your bet. It'll depend on how it rolls out.
You said that's something new you've not seen before, these kind of huge sums of money being raised in the private markets. What then do you think that means for the public markets? These are companies that are discussing IPOs and coming to market. We've got, for example, SpaceX. Also, these huge sums. I mean, how do you bring a company like that to market? And is there going to be support from the public markets for companies like this?
Yeah, I think the public markets can handle it, and the public markets are an absolute reference point. They're not going to go away. That's what companies will aspire to at the end of the day. That's where equity markets get democratized in a way that allows a lot of people to play and participate, a lot of great price discovery. So that will happen. And I do think that the public markets have mirrored the private markets. What has happened is that the private markets have stayed private for a lot longer, but I think the sizes will be fine.
Are you expecting the IPO market in the US particularly to reopen for these big tech companies soon? And have you got kind of a timeline on when you think that might happen?
Yeah, I think you could do deals today. I think that right now in this first 6 weeks of the year there's been volatility and there's been some turmoil, but the market participants are there poised, there's research, there's anticipation, everybody's following these stories. There's a lot of savings that are ready to be put to work. There are large pools of savings out there, and they're looking to be deployed. So I think the public markets could handle large deals, and I assume that some of them are coming soon.
Bernie, we're here in New Delhi, so just want to get your take on India market. It's been one of the world's fastest growing major economies at this point. From a global investor standpoint, what do you think are the opportunities here, but also some of the underappreciated risks at this point?
Yeah, no, India is a terrific place. I'm excited to be back. I come more and more often. We have a big business here. We have 30,000 colleagues spread around India in all the different parts. And we see our Indian clients growing at pace, and we want to grow with them. And then we see a lot of multinational and other companies wanting to come in India, and they want us to be here with them. So India is well placed. The most valuable resource that India has is its people and its talent, and it's investing in them and it's growing in them. And then India also has a couple of unique areas, such as its sort of digital layer that is put in place with Aadhaar, with the UPI systems, etc. So I think that allows it a good base to build on AI. So I think those are some terrific advantages that it has. A quick point on things that could impact it are, I think Prime Minister Modi's event in the next day or two around regulation and around some of the bureaucracy that might come into place. But that's a debate that's happening all around the world.
Bernard, thanks so much for your insights into the markets and, of course, your view on India as well. That was Bernard Mensch, who's President of International for Bank of America. For now, guys, back to you in the studio.
Arjun, thank you very much. We will see you a little later. Arjun Karpal there in New Delhi. Coming up on the show, the US looks to negotiate 2 crises simultaneously, holding high-stakes peace talks in Geneva. Dan will join us with all the details. Plus, settling up. Bayer maps out a multi-billion-dollar plan to pay for its weed-killer cancer claims. And we'll cross back over to New Delhi, where Arjun will be joined by the CEO of Zscaler. That conversation is coming up in around half an hour from now.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
Welcome back. Let's take a look at the markets for you. And here's how the Tuesday session finished up on Wall Street. All of the main indices posting, slim gains. This was after they'd been closed on the Monday for President's Day holiday. So trading back to normal in the Tuesday session. The gainers were led by real estate. It was up by just over 1%. Meanwhile, it was consumer staples, the basket, dragging things down. The main laggard down just over 1.5%. Real estate and industrials actually both posting record closes. One interesting one to pick out actually in the US markets, Amazon shares closed up more than 1% higher, snapping what had been 9 days of consecutive share losses. Those 9 days had wiped out more than $450 billion in market value for the e-commerce and tech giant. Let's shift our focus to Asia and see how things are doing there. Of course, trade somewhat thinner than normal. Many of the main markets closed for the Lunar New Year holiday. The others, fair to say, not particularly galloping ahead at the beginning of the year of the fire horse, as it were, just up marginally in Tokyo and in Australia there. In terms of the day ahead in Europe, here's what's expected on the open. Looking to begin the day just into the green. Modest gains expected on the Stocks 50, the London FTSE and the Frankfurt DAX. We've had that UK inflation data out, hitting 3% in January, down from 3.4% in December. That 3% in January print, bang on analysts' expectations, adding impetus to the expectations of Bank of England interest rate cuts in the coming year. Crucially, also core inflation in the UK down to 3.1% from 3.2%. All other data out. We've got France inflation reading and Germany's Q4 labour market statistics. Let's look across the Atlantic and the anticipated open in the US, looking at a stronger, firmer open across all the main indices there. Ian.
Yeah, year of the fire horse. Do you know the last time there was a year of the fire horse?
Go on, put me out my misery.
1966.
66. Oh.
The year that England won the World Cup.
Could the stars align?
It's got to be an omen, hasn't it?
Could the moons align? Quite literally. By the way, I would say it's lovely to see you. It's great to be on. For viewers who channel hop, you'll remember that Ian and I, for many years, were on different networks, broadcasting against each other. Now here we are, broadcasting together.
Everyone comes together eventually.
We do indeed. We do indeed. The viewers benefiting from our collective knowledge and experience. Should say a very big hello to Steve, who promised me he'd be watching this morning. He was out at Florence and the Machine last night. I hope the concert was good, and I hope that you're enjoying the show, Steve.
Yeah, and there's cricket coming up as well. Now, Warner Brothers Discovery has reopened sales talks with Paramount Skydance after rejecting its revised offer of $30 per share for the company. Paramount now has the next 7 days to submit a best and final offer for the company, which rival bidder Netflix is allowed to match under the terms of its merger agreement. Well, speaking to CNBC's Julia Boorstin, Netflix co-CEO Ted Sarandos called for clarity on the deal.
P-Sky, Paramount had been making a ton of noise, flooding the zone with confusion for shareholders, so they don't really understand the deal, and including floating all these hypothetical offers into and talking directly to the shareholders and bypassing the Warner Brothers Discovery board. So we gave them the opportunity to get those shareholders exactly what they deserve, which is complete clarity and certainty about what the value of these deals are.
Berkshire Hathaway has disclosed a significant new position in the New York Times, worth just over $350 million. According to a regulatory filing on Tuesday, Berkshire bought just over 5 million shares in the newspaper publisher during the final 3 months of 2025. The portfolio shift towards media and legacy businesses comes as the investment firm sharply trimmed its holdings of Amazon, cutting its stake in the e-commerce giant by nearly 75%, while also reducing exposure to Apple and Bank of America. Well, while Berkshire cut its stake in Amazon, others have decided to increase its holdings in the online retailer in the last quarter. Bill Ackman's Pershing Square raised its stake in the company by 65% to above $2.2 billion, while Baupost Group's Seth Klarman launched a new position worth just under $500 million, becoming the company's second largest shareholding. Meta has expanded its deal with Nvidia to use millions of the company's AI chips for its data center build-outs, including Nvidia's new standalone CPU and Vera Rubin systems. Meta CEO Mark Zuckerberg said the deal would help the company's goal to deliver personal superintelligence to everyone in the world.
It was a high-stakes day of talks in Geneva as the US efforts to negotiate two global crises at once. Washington Special Envoy Steve Witkoff and Jared Kushner went straight from the morning's talks with Iran to mediate the first day of fresh negotiations between Russia and Ukraine. Officials are set to reconvene for a second day, with territorial issues remaining a key sticking point between the sides. Iran's foreign minister hinted at progress in the latest round of nuclear talks with the US held in Geneva yesterday, saying an understanding has been reached on guiding principles, but cautioned that does not mean a deal is imminent. The US Vice President J.D. Vance struck a more cautious tone, telling Fox News it is clear that President Donald Trump has set red lines that Tehran is not yet willing to acknowledge and work through. Well, Dan joins us with the latest now. Dan, I suppose some progress, some hints of progress there, but far from a position where we can say a deal is in the offing.
Well, Ben, Ian, good morning to you both. Ben, you're exactly right. These fresh US-Iran nuclear talks failed to deliver a breakthrough in the most traditional sense, but Washington and Tehran have both agreed to keep talking, which is a positive. The White House now saying that Iran has 2 weeks to submit a written proposal aimed at closing what officials described yesterday as still very significant gaps between the two sides. The US Vice President J.D. Vance also saying Iran has not yet acknowledged what he called the president's red lines here, including a demand that Tehran end all uranium enrichment. So that clearly remains a central sticking point, given the US believes that Iran has the technical capability to build a nuclear weapon. It's something that they've been hearing for more than a decade now. Iranian officials, of course, hitting a more optimistic tone, though, saying these talks were more substantive than earlier rounds, and both sides have exchanged ideas, they say, on a possible framework for a deal. But they also made clear that there's no expectation here of a quick agreement. There certainly seems to be alignment on that. And at the same time as well, these talks also come against the backdrop of what is rising military pressure. We know Iran has been conducting missile exercises near the Strait of Hormuz, even shutting down that critical oil choke point, a segment of it, briefly yesterday. And over the last couple of weeks, we've also seen the US assembling a massive naval force off Iran's coast, which is certainly keeping the threat of military action on the table here. Now, of course, as you would expect, the markets have been taking all of that in as well. We've seen oil prices edging higher on some renewed geopolitical risk here, not in a massive way, but still a sizable, somewhat of a sizable move higher. Defense stocks and the broader equity markets also remaining pretty cautious here as investors try to work out ultimately whether this round of talks can translate into deals, either on the economic side or sanction relief side or de-escalation as well. So markets here, particularly crude traders, firmly in watch and wait mode.
Dan, am I right in thinking that it is exactly the same team negotiating with Iran that are doing the negotiating between Russia and Ukraine? I mean, that's an immense amount of pressure for Witkoff and Kushner, isn't it?
Exactly. Talk about the workload. Steve Witkoff is being called the envoy for everything at the moment, and that has also raised concerns among diplomats and analysts who say the administration may be stretching its diplomatic bandwidth here at a time when the stakes are exceptionally high. We're talking about the two most critical geoeconomic issues right now globally. That is the situation inside Ukraine and the situation inside Iran. With that said, though, it's also fair to say that Witkoff and Trump's son-in-law Jared Kushner, who is also helping to lead these talks, aren't strangers to these high-stakes negotiations. They have this New York real estate swagger. They're personally loyal to the president. They have proximity and his ear as well. That's all seen as positive things when it comes to helping to advance the pathway for these talks. Together, they also have this willingness of sorts to ignore traditional protocols to get things done, and that has worked well in the past. You'll recall that Kushner himself was a key architect of the 2020 Abraham Accords and also the most recent Gaza ceasefire as well. So, look, yes, the workload is heavy at this point, but that's exactly what President Trump expects. The president has also made clear he wants deals, and he wants those deals quickly, both to cap Iran's nuclear ambition and to end Europe's largest war since World War II. Of course, the hurdle here is incredibly high, but you do get the sense that at least some progress is being made despite that enormous workload.